So in this video, I'm going to give 4 reasons why you may want to consider paying off your auto loan within a cash out refinance mortgage. So it's something I've done for people in a few situations. It's not particularly uncommon. At the same time, it's not the most common way to go about things, but in certain cases, there's a big advantage to doing it. So I want to at least mention it just so you have your options and you kind of know what's out there, right? So for number 1, I'm going to say monthly savings or term, if you want to look at it that way. So say you have a auto loan, maybe you have 4 or 5 years of payments, and then that loan is paid off. If you refinance into a 15, 30, 20-year mortgage, you're stretching out the term. That's giving you a lot more breathing room monthly, right? So that might save you $500, $800 a month. You could always take that money, reinvest it in the mortgage if you don't want to be paying on debt for an extended period of time. Pay that mortgage off sooner. You can obviously take the money and put it towards a retirement account, any number of things, right? A lot of people might think, it doesn't make sense to pay off a short-term debt within, let's just say, a 30-year mortgage. But keep in mind, you may refinance in a couple of years anyway. You may sell the home, so you might not be planning on being in that mortgage for anything close to the 30 years anyway. And this is giving you a little bit of breathing room, okay? So for number 2, I'm gonna say the rate. If you have outstanding credit, stands to reason you probably have a better rate on your auto loan than your house. If you have poor credit, it can be very much the other way. I've done loans for borrowers. I did a loan for a borrower where they had a 20% interest rate on an RV, and I think 12.5% on a car, and like 8% on another car. The loan was a VA, maybe in the high 2s or low 3s as far as the rate. So you're talking about significant savings in interest rate, right? Number 3, and I don't think this gets considered a lot, but I'm gonna say free and clear, owning your car free and clear. And that gives you the ability, if you wish, to eliminate comprehensive and collision coverage, which would save you even more money, right? Now it's your option, it's completely your car. And then for 4, I'm gonna say taxes. Typically on a personal auto loan, and you'd have to speak to CPA, but typically you wouldn't have a tax benefit on the interest you pay on a personal auto loan. However, you may have some advantage within a mortgage on your home. So again, speak with a CPA, but that to me is another obvious benefit that you may be able to receive. So I'm gonna leave an article that I wrote with some links and some helpful information if you want to learn more about this topic. If you have any questions or concerns, you can leave them below or leave them on the article as well.